Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 24 of the Forex market review. Today we're going to take a quick look at CNBC just to see what's happening with the news and what's driving the markets this week. It's a bit of a something happening out there that will make you rethink the way you have to trade. You may have a technical setup, but you may want to look at some of the fundamentals just before you make a decision with your trading this week. So let's go ahead and look at CNBC. So here we have is a CNBC website. Just go cnbc.com, and over here on the right hand side you'll see markets. And pretty much what I want to do is just understand what's happened with the market overnight and where it's going. Now, the first thing that pops to my head is the European session. So it's on Europe for European session. It says here the Europe closes down ahead of the Fed and Brex fears way. So you want to just click on that just to see why is the market driving a certain way and what's the fears they're talking about. So as you read through this announcement here, what you're going to read is coming up, there's a Fed announcement, and the Fed's going to determine if they're going to raise the interest rates or not. So early Thursday morning, about 2 a.m. Eastern States time in Australia, what you'll find is they'll make a decision whether or not they're going to leave interest rates at 0.5% or whether or not they're going to increase it. So anybody trading a pair against the USD, what you're probably going to find is that the USD is likely maybe weakening, but it likely could be strengthening. It all depends on which pair it's going against. Now, if the US Fed increases interest rates up from 0.5 to say 0.75, that's going to not be what's expected. They're expecting it to remain unchanged, and then you're going to see the US dollar strengthen quite heavily. However, the likelihood they'll leave it unchanged, and the reason why they'll leave it unchanged is because the data that has been coming out of the US over the last few weeks hasn't been as good as expected. And just last week we had the Fed do the non-farm payrolls, which is one of the very important things that they action at the first Friday of each month, and that determines the unemployment levels and all that, and that had dropped significantly, so they didn't increase as many jobs as they expected. So it's very likely the Fed will keep the interest rates on hold. So you want to know that, because you don't want to be trading against and going long the US dollar expecting it to go in your favor, and that's what's driving that market this week. There also is the fear here, the Brex exit fears way. So what's happening, if we just scroll down a little bit more, we're going to read something about here. And so here's talking about the jobs data for the US, and then here's the Brex. Should the UK vote to leave the European Union on the referendum on the June the 23rd? So at the moment, you're probably going to notice that the UK and the euro against probably something like the US dollar are falling, because people fears that if UK pulled out of the European Union, that would be bad. UK's biggest trading partner is Europe, so we just got to keep that in mind. So while this is going on, if you're trying to long a Pacific trade such as the euro or the pound, you're probably going to have been stopped out this week. So just keep that in mind when you look at some of your trading pairs. So we're expecting the UK and euros to weaken, but maybe something like the euro against the UK, you probably see the euro strengthening, because the overall factor is the UK, which is going to be the most weakest, but it's going to push that weakness against the euro. So just wanted to run through CNBC just so everybody understands. Look at this website, hopefully on a daily basis, and get a view of where the market's pushing and why it's pushing, and that can determine which way you would like to trade. So let's jump across to the charts. Got a couple charts we're going to look at. Firstly, the pound USD. So we've got a pound USD. Let's jump to the higher time frame, the weekly chart. And as we can see, we have this large move down, push back higher and back down again. So we have our divergence with a higher AO and a lower low. And we'll probably notice that this move down here, if we use our Fibonacci expansion tool, was probably about the 100% move. So you go from the highs to the lows, back to the recent highs, and the Fibonacci 100% expansion move is all the way down there. It's hit the 61.8, and it's also bouncing off a horizontal resistance or support area. So if it does, it probably push a bit lower, but just keep an eye there that the market could be looking at wanting to reverse. Dropping down to the daily chart, what we can see is this large movement here, and as indicated with the Brexit vote coming up probably next week, I think it was June the 23rd, we're likely to see the weakness here. So that's why we're seeing weakness this past few days and week. So if you're going against that trend, you're probably going to have some problems. But what we do want to notice is we look like we possibly could be starting a new wave cycle down. So we could be on the wave 1 down. So that's wave 1 down. Then we have our wave 2 push back higher. Then we're starting our wave 3 back lower. All of this is 3. But until we see it come back to zero line, we're not quite sure. The only thing that I don't like is this AO here is smaller than one like that. So it could be a very short-lived move down. Drop down to the 4-hour chart. We'll just go ahead and remove those indicators there. And what we can see is a large AO. So as we know our rules, we just start at the top. We put wave 1. Again, if you can't identify wave 1, that's fine. Come all the way down for 2, push back higher. When 2 has pushed all the way back up, we push back down for wave 3. So wave 1 down for 2, using our Fibonacci retracement tool, we expect it to come back to at least 61.8. Can come all the way back up, but just can't break the highs of the start of 1. It didn't. It came up to there and it pushed back lower. Now if we're expecting how far could that push lower, well, that's where we use our Fibonacci expansion tool. Again, from the highs to the lows, back to the highs again, and we're expecting to push to the 100% level. And it can push, looks like this is really extending right down. It could push to this 161.8% level. Looking left, we have some support levels. So if we draw those in, we're probably looking around about these levels here. And there's probably one somewhere around in here. So somewhere in this level, we're likely to see it push back higher. So if you're going short on this, you'd want to be considering maybe exiting out. So that's just an idea of where it could go to, and it's pushed there based on that Brexit exit, the issues with the UK pulling out the European Union. So that's why it's falling so heavily. So we'll just go ahead and remove that. But if it does have a bit of a pullback, now that could be after the announcement, which is probably the better move to do. But if you're looking at a wave cycle pattern trade, we want to see this wave 3 come back to zero line and see it pull back to at least 38.2, but we like to see it come to around 50%. Again, always look left, and you can see it's bounced a few times there. So anywhere in here could be a point to move, and that's where you can look at shorting it again lower. Dropping down to the 1-hour chart, we can see this wave 3 move down. Again, we have 1, 2, 3, 4, 5. So where I was saying it's likely to be ending around this levels here. Dropping down the 1-hour chart, we're starting to see that with divergence. So we get the higher AO with the lower price. So just keep that in mind that it could be reverting, and if you want to take a pushback higher, you more than can. but as long as it meets your trading rules. And again, on the lower time frame, 15-minute, it's doing that. So very likely we could be seeing the pound USD push back higher. The other one I want to look at is the USO USD, and that's the US oil chart. So the reason why I'm looking at that one is because we've been looking at our past few weeks, saying ourselves, we can see divergence. When can we have an opportunity to look at selling it? Again, look left for support and resistance levels. So you're going to just zoom out a little bit more. We're probably going to find some resistance levels. You can see it's bounced there a few times. It could even go that little bit higher. You can probably see a level all the way up there. It could even make it. And then you got levels roughly down here that you want to be considering. See that really big one there. So if you're looking at exiting a trade, you want to know where all these levels are so you can make a decision. Looming out to the weekly chart, what we can see is 3, 4, 5. So it definitely looks like it's pushed higher. So this could be A, B, C move. So we're probably looking at trying to take a wave B motion down on the weekly chart. Drop down to the 4-hour chart. Again, look for divergence. Here we have a lower AO with a higher high in price. So that's definitely, we want to see that. That looks like it could be pushing back lower. We're seeing it retest the support area, and then it's going to push back higher, and then you want to look for an entry position. Looking on the 1-hour chart, we can see a wave 3 pattern there. So we probably could call all of this wave 3 for the time being. 1, 2, very hard to see, but that's all of 3. Again, until it comes back to zero line, we don't know this wave 3 has ended. Follow it back to the beginning, drop your cursor in and look up, and somewhere up here is the start of wave 3. So we can see that little movement there. I'll just zoom in for you. And you can see 1, 2, down for 3. So if this is going to pull back higher, we're probably going to expect it to come back to that 38.2 or 50% level. Again, always look left for the support and resistance levels. And as we can see on the lower time frame, it's these two levels here. So it could come and bounce in between there. Look for some divergence, and then you can look at selling the market with your stop loss all the way up here if you wish, risking 200 pips. So let me just zoom out again to the daily chart. So if we were looking at getting in roughly where those lines were, we're looking at risking 200 pips, and we wanted to get out down to these lows, so we're looking at 600 pips. So as you can see where it's bounced on the daily time frame, getting out there would definitely make you risk $100 to make $300. That's a 1 to 3 risk to reward. That's a fantastic trade, so you definitely wouldn't want to push it much lower than that. And so if you're seeing everything setting up to tell you to get out with divergence on lower time frames, support levels, whatever it is, even this 200 EMA, you can see that's also on that line. That's another area it's going to bounce off, and you see the stochastic come back below the 20 and start kicking up. That's everything would be pointing to get out. So in this case, look for an opportunity on a pullback. You could look at selling into the market and then writing it down for a 1 to 3 risk to reward. So thank you for that. I hope you enjoyed week 24 of the Forex market review. Again, look at news announcements coming up, follow CNBC, find out what's moving the markets overnight, and try to understand why it's moving and where it could go to, and then that'll definitely help you in your trade. But if a setup occurs, you take the setup regardless, unless it meets your trading plan to follow the news. We wish you all the best in your success. Take care. Bye-bye.